Sanjay Manyal, equity research analyst at ICICI Securities, joins us on the show with a perspective on what to do with some of these stocks which are trading at high valuations, some of them, of course, at record highs. Sanjay, thanks very much for speaking with us. What's your initial reading on the key numbers that have come out from the FMCG pack, Godrej Consumers, Dabur, HUL for that matter?
I think most of the companies have really shown good volume growth, specifically if in terms of, if I see the biggest player, HUL, they have shown 10% kind of in volume growth, which is considered now sustainable after specifically 8 quarters of sustainable growth. I think the management or the company's ability to increase the volumes have increased, and that has helped them increase the prices simultaneously, and that's why the company is showing growth in both earnings and the revenues side. If we really see overall, either it's Dabur or HUL, I think most of the companies are really getting the benefit of the increasing demand coming from the rural areas, and that has resulted in the really robust volume growth for most of the companies.
Sanjay, going ahead for the quarters, good morning, this is Neeraj here. Going ahead for the quarters, what do you think will have more prominence? Would it essentially be volume growth over the next 2 or 3 quarters? Or do you believe HUL can probably do an encore on what they did this quarter in terms of how the cost of goods sold has also been contained, and thereby there has also been margin expansion that has taken place?
I think both the things really happen simultaneously, because the rural demand is increasing because of the various reasons, either it's higher MSP prices or government's focus on the rural India, and I think the company has been able to get the benefit of that by really increasing its presence in those areas and witnessing volume growth. And I think if you really see the price growth really happen simultaneously, if you have a margin pressure, if you have a cost pressure, then you try to increase margins, and you only can do that when the volumes are sustainable. So I think both the things really will happen simultaneously.
Right, but what would be your call on a stock like HUL at this point in time? From a valuation perspective, some brokerages are taking a contrarian position on the stock. However, the numbers have been encouraging.
I think FMCG stocks always really you get these stocks at a higher valuation. Because if you really see the opportunity size in India, it generally discounts more than 2 years of valuation. Valuation-wise, these stocks will always look expensive, but I think the opportunity size is big enough, and I think these valuations are justified.
So based on your earnings estimates that you have for FY13, you believe these are levels to hold on to HUL, or you would initiate probably a buy or a sell at the current levels?
I think these are the levels where still we can hold on to the stock.
Great. Before we let you go, Sanjay, your top recommendation or a top pick from the FMCG space?
I think overall, if you really see, in the large cap or in the large cap area, I think we are very positive still on ITC. In a smaller place, in the cigarettes category, as I mentioned, overall we are very positive, and that's why we have a buy recommendation on both ITC as well as VST Industries in the mid cap space. These would be the companies, the stocks which we really positive are.
Okay, Sanjay, good having you. Thanks so much for taking the time out and joining us and giving us that perspective.